What's up, wallet monkeys? 8 steps to boosting your credit score in the next 30 days. We're about to dive into it. Stay tuned, buckle up, let's go. Ooh, devil's juice. What's up, wallet monkeys? Welcome back to the channel. In this video, we're gonna cover how to boost your credit score in 30 days. All right, so first off, we have to reference the infamous FICO pie chart. So hopefully, cue the editors, we'll put it like right here in the corner, and that'll hopefully stay there for most of the video. I think that's the best way to do it. There's 2 things that I wanna point out here, okay? There's amount owed, which is 30% of your FICO score. And then there's payment history, which is 35% of your FICO score. So together, those 2 things are what? 65% of your FICO score. So obviously, that's where we need to put most of our focus. If we're looking for any sort of short-term bump, or if we're actually in the rebuilding process because we're trying to set ourselves up to then get in position for, new trade lines, app sprees, etc., this is where we should be putting most of our focus. Not credit mix, which is 10%, or any of these other things. We need to focus on the big dominoes that are gonna give us the best result, right? All right, so the first thing we need to do is lower utilization. Now, this can be done many different ways. And again, it can be done through the lens of temporary or, long-term fix. Simplest thing to do is just pay more money. So pay more down on the debt before the statement date. This is where you can actually start to play the game, because there's 2 dates that you need to know. There's the payment date or the payment due date, and then the statement date. Those dates are usually not the same. The statement date is when it generates new statement, which then calculates how much interest you owe on the credit card, the installment loan, etc., right? And then the payment date is just when you gotta make the payment. So if you wanna game this and get ahead, whether it's for a short-term window to make your credit profile look a little bit better, or long-term, you wanna make sure that you're paying more down before the statement date, you guessed it. Okay, next is, speaking of utilization, remember this, is if we are over 50% utilization, expect your credit score to drop by 50 points, at minimum. And if you're over 70% utilization, your score is gonna drop by at least 100 points. I've seen it and I've done it, so I can speak directly from experience. All right, next, number 2, we wanna catch up late payments. So we already dealt with 30% of the credit profile. Now let's deal with the 35%. Payment history. Well, AKA late payments. Late payments are insane, actually, because first off, they can drop your score 50 to 100 points. Next is they can stay on your credit profile for 5 to 7 years. So it's like the same as a bankruptcy. You might as well just go bankrupt instead of missing a late payment. So it's that valuable to your credit score to just, please, do not let that happen. And so there's a few things we can do here. If it's the first time you've done it and you literally just did it, like this month, last month, call them. Call the creditor itself. This is the first time this happened. Blame COVID, blame your grandma, blame anybody. Make it convincing, create a good story, and just, essentially beg for forgiveness. If they say no, hang up, call back till you get a good rep who's having a nice day, who's happy, who wants to help people, they're excited about life still. You want that type of person because they're going to, they're gonna be the one that's like, hey, okay, let's get rid of this. And if it's older than that, then you're gonna have to go to work. Like, the only real way I know to remove lates, because I never really had lates. I had collections, I had a bankruptcy, that's it. But now dealing with enough credit profiles and seeing this, the only real thing that works that I've seen consistently is a goodwill letter. And you send the goodwill letter to the creditor, not the credit bureaus. Trying to remove this through going to the credit bureaus and claiming something against an open account is really tough because it's an open account. So it's kind of like we're trying to say, whatever angle we're trying to play, it's like, it's an open account. You've been paying it. Like, it's really hard to win that. So your best bet is a goodwill letter. And if it's got a legal letterhead, if it's like written by a lawyer with legal verbiage used and that kind of, lawyer tone, you're gonna have a better success rate than if you write it yourself. But if you did wanna write it yourself, just make sure that you get some sort of legal head and it'll do much better than, again, without it, okay? So that's your best bet to remove it if it's older than just happened. Now, what else I've noticed that's interesting is if a late payment is like 4 years or older, just forget about it. Don't really try and do anything with it because it doesn't really seem to impact your score that much. And these are due to changes with, FICO 8 to FICO 9 and now with FICO 10, these kind of like short-term issues that you have, they go away fairly quick, right? So that's what I would suggest there. Again, late payments is probably the most difficult one that you gotta face. So lastly, if you're having issues with, making your payments or you're forgetting, you're constantly like waking up in the middle of the night, stressed out, thinking, did I pay that one? Make yourself some simple alerts. You can do this in Google Calendar. You can do this with some sort of other software. You can spend all kinds of money, I'm sure, creating software or, using some other paid software to do this, but we could just use Google Calendar and just, put in those payment dates or put it in a few days before the payment date because trying to make the payment on the payment date is a bad idea. Or another way you could do this is to set up auto billing. Now, I know a lot of people don't like auto pay because they don't like the idea of people like pulling money out of their account, and if they do the math wrong on their checking account, then it gets overdrafted. First off, I'd rather have my account overdraft any day of the week than be late on a credit card, because I can go and fix that. And a lot of these banks are still giving you leniency on overdraft fees, especially on business accounts, because they know that times are still tough. So I can go get leniency on that a whole lot easier than I can go get leniency on a late payment. So overdraft my account all you want, as long as I get that credit card payment made on time. That's the way I look at it. And then the second thing you could do is just do the minimum payment. Like, you don't have to make some big audacious payment with the auto pay. Just do the minimum, so then, okay, that's done and dusted, that's covered. It's gonna get paid in time with plenty of time for it to clear, and no issues are gonna happen or goofiness on the payment itself. And that would be a way that you can ensure that you don't have this issue, right? All right, number 3, remove collection accounts. So if you've got collection accounts sitting on your credit profile right now, we need to get to work on those. So here's the tricky thing, is out of the gates, if you're gonna do letters, expect at least 4 rounds of letters. And if you're gonna do this yourself, you could hire somebody, a credit repair, etc. But I know that there's good ones out there. I personally don't have good experience at all, and I don't like it. So that doesn't mean though that it doesn't work, okay? It just means that that's my opinion, right? So there probably are some good ones out there, but if you wanted to handle this yourself, expect, 4 rounds plus of letters. Now, the next thing that's kind of weird with all this is, okay, so we're calling this debt company, or this company that holds the debt, and we're trying to get to a point of them not playing games, messing around with us, without really admitting who we are. Because there's something tricky and shady that a debtor can do when they're talking to you. If they can get you to confirm your name, confirm your information, they could, not saying they will, they could report an update to the credit bureaus on that debt, which in some states restarts the debt cycle. So what do I mean by that? Is after a certain amount of years, the debt, we can use the fact that it's a dormant debt essentially as the means to remove it. So by locking down second tier bureaus and the type of lettering that we use, we can actually point the two at each other and say, hey, he's the bad guy, they can't double check it. And then so, oh, yep, must be right, because we can't double check that data. And then that's how it gets removed. And so the longer it sits dormant, the better for removing it. The easier it is to remove. I do know that. So that being said, is the minute we call them up or try to talk to them to work out some sort of pay to delete or pay to, get rid of this in some sort of way, is they could, if they wanted to. We don't follow through, fast enough or whatever, they could update the debt, and that would kind of restart that clock. I'm pretty sure that still exists. If not, correct me in the comments section. How I usually like to do it is, definitely err on the side of caution when talking to them. I do know that there's been success stories of them paying that off. Keep in mind that it'll still show up, like the lates and everything, all the history leading up to the collection, but at least now it'll show a settled account. So again, that's not ideal. It would actually be better if it was just removed completely. So that's why a lot of people opt to not pay it, and then they just try and remove it. Again, that's up to you. I'm not a credit repair guy, okay? Number 4, wake up old cards. So we've shared this story several times now, but George Washington lost $77,000 with FNBO because they were cards that he didn't use. They were sock drawer cards. He wasn't even putting minimum spend on them. And because of that, they shut down the accounts. Now, also too, they're shutting down accounts for a lot of other reasons. We'll cover that in just a minute. But we do not want to be losing trade lines or having trade lines cut because we aren't using them. So we have to come up with some sort of process to rotate through a minimum spend, $5, $10 on these cards so that they stay active. The longer you leave those cards inactive and don't use them, the higher your risk or the higher the chance of them either cutting the limit or closing the account. And we don't want that. So we have to use these cards, whether you like it or not, right? And if it's been sitting for a while, like 2 years, a year, 2 years, and then you start using it again, I'm sorry, but you still run the risk of them cutting the limit. So, oh, this card got active again. Oh, look, they're barely using it. I don't know if it's an AI thing or manual underwriting, but I've seen that happen as well too. So we have to stay up on this because, again, we've already got enough that we're trying to fix. The last thing we want is some curveball out of left field that's slashing a credit line that we didn't see coming, right? That'd be horrible. And that can affect your credit score because, again, if we're at this super sensitive place to where our utilization is high and our credit score has been affected by that, is if we were to have a credit limit now slashed, we could start to see a series of adverse reactions like an avalanche or a snowball effect of getting more and more and more and more. And then we're just all the way down, pinned against the wall now. because of that. And that can drop our score because now our utilization looks even higher, which would then trigger that. Make sense? Number 5, get new credit cards. So this is gonna be way trickier when you've got high utilization and the score is below 680, because 685 is really like that minimum, but there are some options that we've got. So let's go over that. First, we wanna focus on fintechs that will not pull your credit score at all. Maybe they're hooked up with Plaid or IMEX or some sort of link up your checking account to get approval type of card. Like we just covered the Rocket card recently. That's another Deserve card. The CrowdFit card, any of the Deserve cards do that. You basically just upload your ID, take a selfie photo, and then link up your bank account, and then they'll approve you based off of that. So anything like that, we wanna stick with that. And then anything that will be a soft pull and tell us the limit that they're gonna give us before hard pull, or there's just no hard pull at all. So those are the only offers that you really wanna look at. And there's quite a bit there. There's Gemini, there is the Apple card, there's also the GM card by Goldman, and who else we got? We got all the Deserve cards. Yeah, there's probably some others. Go check out our soft pull credit page, and we've got like 80 something offers on there. So you'll find plenty on there. So those are the types of cards that we want to stick with, because why do we even need new credit? Like why should we be doing that? The limits are going to be lower, yes, but we need fresh credit so that overall it lowers our utilization. That's it. That's all we're trying to do. So by us getting more credit, it makes the utilization gap better. Make sense? So that's why we would want to do that. Okay, number 6, become an AU. AU meaning authorized user. Now, it's been a while since I did this. It hasn't been since like 2019, and I know that things have changed. Some of the credit cards who are reporting full history have changed. How long it takes them to report has changed with some banks, I'm sure. Are they still all reporting to all 3 bureaus? I'm sure we've seen some changes there, but AUs are still really, really powerful. Now, this can be used in 2 different ways. We can use this if we want to go get credit at a new bank, we'll go get an AU at that bank, so then we're starting to share data points. But as I've shared in previous videos, you could go get a safety deposit box, you could go get added onto somebody else's account, or a lot of other ways to get into that bank, so then they can start to send you targeted offers. If we didn't want to do that route, and or we wanted to thin out our utilization, get added on some AUs. So that is a shorter term fix, unless you know the person, because AUs are not cheap. So they're only going to stay on your profile for like, I don't know, 60 to 90 days. I've seen some last longer, take a while for it to get kicked off, but expect that it's somewhere between 30 to 90 days for all of them. So that gives you a very small window to where utilization goes way down. Then we can rush out and go get credit limit increases on existing cards or try and get new credit. So then by the time the AUs drop off, we've now reworked our credit profile enough that it's hopefully looking better, right? So, and again, all this falls into a very quick, actionable 30-day window that we could actually do this, right? Number 7, keep payments on time. This should be an obvious one, but like especially during this 30-day blitz or during the rebuilding process, you do not want to miss a payment. And I've already harped on that enough and stressed on that enough. We do not want to be missing payments on this. So again, keep up on that. Set yourself alerts, reminders, one day before, set up auto bill. I've given you the solutions, run with it. Okay, and number 8, lastly, diversify. Now, I'm not just talking credit mix, meaning credit cards, installment loans, mortgages, car payments, all that. I'm not just talking that. I'm actually talking something different. I'm talking within the amount of credit cards that you've got, we need to diversify. And the reason is simple. So we shot 2 or 3 Synchrony videos pointing out they're slashing limits, closing accounts, whether you use the account or not, you had a balance, never used it, didn't matter. They were rapidly closing accounts. It seemed to happen through the last quarter, through the third and fourth quarter of last year. It seemed to be the worst. But those videos still get comments on a regular basis talking about, hey, yes, this happened to me. And then the second one is we saw with FNBO, similar thing happened. It got kind of hot in the credit community, a lot of people subbed in, and it seemed that, again, regardless if you're using the card or not, keeping a balance or paying it all off, they came and slashed limits. George Washington lost $77,000. Now ask yourself, if you were to lose, like how much percentage would that be of your overall total credit limit, and would that negatively affect you? Because it didn't affect him, which proves that he's got a lot of other credit out there. It's one of the reasons why we want to do that. So I know that sometimes people question, like, why would you want so much credit? That is one of the reasons why, is because we never know a Silvergate, Silicon Valley Bank situation happens, or they just do like FNBO, like Synchrony, Community does this as well. All these store credit cards do that to where they just cut and close accounts for no reason. Any bank actually can do that at any given time. So let's not forget that, right? Let's remember that. That's why we want to diversify. So we want to have our hand in enough pies to where, again, if they were to shut this down, it doesn't affect me and destroy my life. Because let's look at the other scenario, which I already kind of briefly covered, is, okay, let's say that 77,000 was 50% or 60% of your total credit, and they shut that down overnight. Your score tanks 100 to 150 points. Adverse actions start flying in, everyone's cutting your limits, closing accounts. Your whole life is ruined. Your whole life is ruined over one decision that one person made or an AI made that had nothing to do with you. Crazy, right? So like, this isn't a game with what we're doing. I need to make that crystal clear. And that's why we want to diversify. Cool? So those are the 8 things that I would do to boost my credit score in the next 30 days. I'd love to hear from you. Comments, feedback below. Thanks so much for watching. We'll see you in the next one. Hey, you should subscribe. 60% of you are not subscribed yet. Right there. Okay, bye.